Good afternoon. Welcome to the Forex Pro Charts weekly analysis for the week of December the 5th, 2010. This week we are going to be taking a look at the New Zealand dollar pair. Looking at the New Zealand dollar monthly chart, we can see that price is at the upper edge of our playing field and actually appears for the last 3 months to be using the monthly armpit, which is indicated by this thick black dotted line. It appears to be using that as resistance. Here we have, if you're looking at this chart, you see the thick black dotted line is the monthly armpit. The slightly thinner one is the weekly armpit. And this thick black solid line is what we call the upper edge of our trading field. And it is determined by previous monthly highs. In this case, I believe that it is also a historic high for the New Zealand dollar. So we can see where price from this point had gone all the way down to what is now the lower edge of our trading field, then moved back up. Of course, all this is over a long period of time, months. And when it reached, both times when it reached the monthly armpit, actually here it didn't quite reach it, and then it retraced somewhat for several months and then moved back up to that monthly armpit. And then now, instead of actually retracing, we're seeing kind of a consolidation. The New Zealand in general kind of tends to follow the Audi. The Audi appears to be in a long-term uptrend. Fundamental traders seem to think that the Audi is in a very long-term uptrend and will be increasing in value. The New Zealand is not paralleling the Audi as closely as it did at one time, but there might be some similar expectations long-term here for the New Zealand dollar. So in general, we are expecting that price would potentially have a high likelihood for reversing, or at least a significant retracement, any place in between the monthly armpit and the solid outer edge of our trading field. So we are coming to that area where there might be an expectation for price to reverse and retrace significantly. Of course, we're trading Forex, there's no certainties, and price could also continue move up through this outer edge of the trading field and establish new highs. At this point, on the monthly chart, again, we're in basically a holding pattern. So let's take a look at the weekly chart and see where we are there. Sorry about that. Now, on the weekly chart, we can see where price had been moving up and actually passed the monthly armpit, bouncing off of the weekly armpit in 2 weeks, and so this will show basically as spikes on the monthly armpit, and then actually pulled back down to this zone here. This zone was newly formed. This support zone was formed recently off of this pattern right here, where we had this support, and it would have been formed off of the daily chart. So this was a retracement. It could be a reversal, because as we see, price did get into that area between the thick monthly armpit and the solid upper edge of our trading field. And so price could indeed have reversed, but we are seeing a significant retracement here at this zone last week. And of course, price may venture back up into this area several times before deciding exactly what to do. And that's one of the nice things about the Forex Pro Charts system, is that because we're trading bounces and we're basically day traders or short-term traders, we look like, of course, significant price moves just like anybody else. But because our system is based on bounces and not ultimate direction, we don't need to know which direction price is taking. We just need to wait for it to reach one of our zones, and we can take the trade. So we see here that this past week, the New Zealand dollar pair hit this zone and hit the 60-minute armpit, and so we are going to take a look and see what price did and so forth when we get there. And I apologize for the stops and starts. I've got a horrible cold, and I'm having to stop and start if I have to cough or whatever. So I apologize for that. So let's take a look at the daily chart. Well, let's talk a little bit again about this here. We have established a resistance zone right below the weekly armpit. That zone, as you can see, is a very nice zone. It's got on the weekly chart, it has the clear rally-based drop pattern that we like, and price spent almost no time or very little time in this zone. And price moved up strongly and down strongly, which is what we like to see for a zone. So this, and then combined with the weekly armpit, this particular zone looks to be a very nice zone. We'll look at risk a little bit more. This next resistance zone that was identified on the daily chart does not have the rally-based drop pattern that we would normally like to see. And so that will make it not quite as strong a zone, and we'll look at the daily chart and see what we see there. This zone, this support zone, had a very slight drop base rally pattern on the charts, and you can see you can see price came up here, it dropped, and then it rallied again. You can see that was an overall retracement on an overall upward trend, so it's not as clear a pattern as we would particularly like to see, but the pattern is there slightly on the weekly chart. In addition, I think I would have to look at the daily chart, but if I remember right, this risk is fairly low. So let's go ahead and take a look now at the daily chart. Okay, so here is the daily chart, and we are looking at price as it came down from this weekly armpit, formed another zone which also had the monthly armpit in it, and moved all the way down to this support zone, bounced, and we're going to examine the bounce. This was a successful trade for us this week, and we'll take a look at this on the hourly chart, but price moved strongly down to this zone. It actually went just a couple of pips out of the zone, but not enough to go through the 10 pip cushion that we recommend that our traders use. So it hit there, and it bounced, and then moved strongly back up, and looks like this week it could easily reach this particular zone. Looking at this zone starting at 77.49, you can see that the 60-minute and the 5-minute armpits are virtually on top of each other at the very top of the zone. So there is a very low risk here. We are likely to see price bounce. It's going to have to get through this daily armpit and through this daily trend line. Daily trend line, and through this weekly armpit before it gets up here. Sometimes price, when the weekly armpits this monthly armpit. So sometimes when the monthly armpits are through the middle of the zone and don't coincide with a 60 or a 5-minute armpit, sometimes price can bounce there and then not bounce when it hits the 60-minute armpit. So that would make this trade a little bit riskier, but the risk on it is so low that many of our traders will want to go ahead and trade the 60-minute armpit anyway, because again, this is the first revisit to the zone. We see that price moved strongly out when the zone was formed, which is one of the things that we like to look at. So we would expect to see price go ahead and move up here, and unless we see something that makes us change our minds, we would anticipate trading the bounce on the 60-minute armpit. But I would not be surprised to see price just take a small bounce and then continue back up to the weekly armpit. And then in that case, we have a nice zone here where again it'll be the first revisit. Price moved strongly out. We have a reasonable risk to reward ratio. We have the end of our zone strengthened with the presence of the weekly armpit where price has been turning, and this would be the first revisit to this zone, so this would be a very nice trade potential as well. However, you need to remember that we're thinking that the overall trend of the New Zealand still could be up. It may be reversing here. It may reverse and then continue down, but again, it could go up. So that's the reason that we always ask you to take your trade in portions, take the first bounce out, move your stops to break even, and then wait and see if the longer term price movement appears. If it does appear, great, you've captured it. If not, you've protected yourself and you have no further risk because your stops being at break even. Now, should price turn at some point and come back down to this zone, what about this zone? Because as you see, We're from where the zone originated, then prices come down and visited that zone again. And will we want to trade it again? One of the ways we normally, the more revisits there are to a zone, the weaker that zone is. We did not crosshatch this zone this week because price is moving into and out of this zone strongly. And if it does go all the way up to this zone or this zone, maintaining the 3-to-1 ratio of the zone, then we likely will trade it again because we've got a very small risk here, and because the action on both edges of the zone was so nice and strong. However, should price, for example, turn here and move back down, then we likely will not trade that and we'll wait for this zone here. Because again, if price were to reverse right here, we would not have the 3-to-1 ratio on this last move out of the zone, and that would make the likelihood of the bounce much weaker. When we see price go through a zone and not achieve the bounce, very often it is when there was not a true 3-to-1 ratio on the entire zone, and so we're very cautious of that. Let's go ahead real quickly and take a look at the price action down here on the hourly chart and see how our trade last week performed. Okay, so we can see here price coming down into our zone. Sure enough, hit that 60-minute armpit on the nose and took a bounce, which would have, I believe that was about a 50-pip bounce, the first bounce. So if you're doing your trade in the recommended trade setup, you would have hit your bounce and taken the first portion of the trade out somewhere wherever your limit is set at 20 or 30 pips, and depending on where you enter your trade, how much of a cushion you give yourself. And then, depending on the limits you put on your second portion of the trade, many of our traders have a 50-pip limit on the second portion, so you could even have achieved the second portion of your trade and had one trade close out at, say, 20 pips and the other at 50. Then we see that price came down and did spike a little bit through the zone before turning and moving back up. And this is something that we discuss in detail in some of our analyses, the various ways that you can handle your trades. If you had truly moved your stop to break even here, you would not have captured this movement. Some of our traders leave their stop or move their stop so that it doesn't have the full risk, or so that it has a risk that they feel is still manageable, but they want to go ahead and capture even if price does come back down and move through by a couple of pips, and before moving up, they want to be able to capture that. So they may go ahead and protect a portion of their trades with a break-even stop, and protect the remaining portion of their trades just by moving the stop, or by waiting and seeing, leaving the original stop in place and waiting and see where price goes. And those are decisions that you need to make in your individual trade plan. And you may have a trade plan that says, well, if the risk is, in this case, about 30 pips, you may say, if my risk is less than 50 pips, I'm going to just leave the original stop and try to capture the movement. If the risk is more than 50 pips, I'm not willing to take that, and I'll move my stop to break even or to 50, or so that I'd have a 50 pip loss or whatever. But we discuss that at the Forex Pro Chart website. We discuss in our weekly analysis, and in the materials available on the website, we discuss different ways that you can set up your signature trade in order to match your particular trading personality, your risk tolerance, and so forth. But even traders who did the most conservative this time will have achieved at least the first portion of their trade and possibly the second portion of the trade. And so this was a very nice trade for us. Those traders whose trading plan allowed for them to keep a portion of their trade in over the week had a very nice profit on that portion of the trade, and should be protecting at least a portion of that profit at this time. And if price moves up here, we'll be able to continue and capture a majority of that as well. So this New Zealand trade on the 60-minute armpit was a very nice trade for us as well. And of course, if you place trades on the 5-minute armpit, which is not quite as reliable a trade as the 60-minute, but can also be a nice trade as well, you would have done the same thing. You would have seen a nice bounce right here when it first hit, and then the same things would apply. So, for more information or to subscribe to our full analysis and charting services, you can go to www.forexprocharts.com, and we'll see you next week. Thanks.